2014. Just a couple of quick kind of house cleaning items before we get started. First off, all the slides here will be emailed over to everyone that registered a little bit after the presentation, along with a link to the recording of this presentation. Second, if you have any questions as we're going along, you should see on the right-hand side there's a little box where you can type questions in. They'll be seen just by us over here, and we can get to those questions at the end of the webinar. So in terms of the presenters here today, you have myself, Brian McIntosh, the Regional Director of the PJM team here, and I'm joined by Roger Williams, who's one of our senior analysts here. He heads up the weeklies desk for PJM and is responsible for putting those reports out each day. So the agenda for the presentation, we're going to, because we've had such a volatile start to the year, we felt like it was necessary to take a couple minutes and look back at the January-February time frame, go over some of the key events of those 2 months. Then we're going to get into that spring period. We're going to look at some of our weather expectations. We'll look at what kind of generation outages we have coming up. We'll get into transmission outages and our congestion calls, and then we'll wrap up with some just overall takeaways from the presentation. Some of the key headlines that we're going to touch on here for the spring. First is that it looks like this cold weather that we've been experiencing through January, February, and March is likely to continue here, where our meteorologists are forecasting a below average spring. Second part is when we look at the generation offline, it seems like there's been a lot more off in March and going to have more off in early April than we're going to see toward the back half of the spring. And then lastly, when we looked at the outages, there's not a ton of major high voltage line work over the next couple of months. In the past years, we've definitely seen more than what's currently on the schedule. And what that kind of tells us that we may need to rely more on some of these short-term, 2-3 day outages or any sort of unplanned outages that'll likely drive the majority of the volatility over the next couple of months. So let's look back at January and February. This graphic that we're showing you here is looking at the first couple of months of the year. Your red line is showing you your West Hub LMP price that actually came through in 2014. Your orange line is going to show you your 5-year average. And then the blue line, just to kind of illustrate how volatile this past January, February is, we took the highest price from the previous 5 years for each day, and then we showed you that max price for each day over the 5 years. So you can see just how strong a lot of the days here in January and February were. So what you see in point 1, you're seeing that January 7th day set all sorts of records within PJM, peak load of over 141 gigs, gas price of about 43.5 for the TECO M3, and our real-time clear of almost $65. The second event that occurred this winter was both Calvert Cliffs units tripping off that third week in January. Total loss of 1.8 gigs, and they remained down for the 4 days during some really extreme cold temperatures. On that second day after the trip, that's the day where M3 gas traded up close to $72. You saw the West Hub clear at almost $480, and prices ended up staying, upwards of $300 in the real time for the rest of the week there. The one thing we did notice is we started to see toward the back half of the month is some really high day-ahead clears over $700, with the real-time clearing substantially below that, with some of these $300-400 days. On February 12th, we ended up with $196 price, and again, TECO M3 of almost $17.63, and again, we lost some generation over in PSEG that drove some upticks there. So not only did we get this cold weather, these really high gas volatility, but we also had some really unforeseen, unplanned generation outages that added to the volatility and really made this winter unprecedented. Just to further highlight that, we broke down some of this into some tables. We looked at the average demand and average West Hub settle for the on-peak for both January, February from 2013 and then 2014. You can see that the significant difference in both demand in the chart below and then price above in the table above. We had upwards of $100 difference in on-peak average between 2014 January and 2013, and then a $40 difference for the month of February. And you can pretty much attribute almost all of it to demand, but also to some respect the loss of some really key baseload generation. In terms of the forecast that we had back when we talked in December, we're pretty pleased with the way our forecast verified. When we talked back in December, we were calling for a below normal winter across a lot of PJM. For the northern portion of PJM, we're calling for strong below normals. You can see that in the bottom left table. And then we were showing increased precipitation on the right side. You can see the top right-hand corner, the additional precipitation that we were calling for, and we ended up with one of the snowiest seasons on record. So just some takeaways from the winter. The first thing is that we wanted to bring to everyone is that while this winter was absolutely historically cold, it's important to know that these conditions are the coldest we've seen in over 20 years. The likelihood that this repeats itself year over year is pretty slim. But I think the one important takeaway is that there are some definite points that PJM has shown that they're exposed to in these winter periods. Obviously, gas constraints being one of them, and the regions in and around PEPCO, Dominion, DGE seem to be extremely sensitive as well. We did get demand response for the first time during the winter time frame. This occurred on 5 separate occasions for a total of 16 hours. We also faced generators that marginal cost was over $1,000, and that forced PJM to lift the limit on offers in the dam to over $1,000. And then lastly, just looking at the future going forward for winters, in 2015 we have over 8 gigs of generation slated to retire. A lot of it is coal. You have a significant amount of new generation in the pipeline, and a lot of that is gas. And that kind of adds to this potential gas exposure risk. So when you get some of these winter days, if we're replacing all of this coal generation with natural gas, we may get to this idea of gas constraints may continue to rear its head in the future. I'm going to pass this over to Rod, who heads up the weeklies, and he's going to talk to you a little bit about the demand for the coming spring.
Thanks, Brian. So I'm going to start off talking about some of our net team's weather expectations for spring. They're calling for above normals in the west, and in turn that would drive some troughing in the east with some below normal temperatures. And we've certainly seen that throughout the start of March with certainly above normal heating loads, colder temperatures, and they're forecasting risk for that to potentially continue through at least until really kind of mid-April, starting to get into the range where you're seeing much milder temperatures. We're not really looking for exceptional warmth in PJM. We're not at the stage where you're going to see any kind of cooling load. Overall, we're really looking for demand levels to remain seasonally mild, neither a significant amount of heating load, overnight colder temperatures driving any heating load, or really a little too early for any kind of cooling load to start making its way in there. Just looking at the previous year, this graphic shows PJM demand between start of March and the end of May against the West Hub on-peak average settle in dollars per megawatt, and that's just alongside the TETCO M3 gas price. So you can see that certainly March last year averaged about 104 gigs for peak load. Gas remained really in the kind of similar levels to where we are at the moment in the $4 range, and West Hub in the kind of mid-40s that we're starting to see in some of kind of the next couple of weeks, and looking out, modeling that far, we're seeing kind of the sub $50 range start to make its way in. And really taking from this, you can see that that any kind of pricing movement is really demand driven. The gas plays very little part in terms of these shoulder months at a low price, and that's certainly what we would be expecting for this season as well. Next, I'm going to move on to look at some of the generation outages. To do this, we looked at the previous year's PJM forecast generation on outage. This is the sum of EDAR outage tickets that are submitted to PJM for planned generator outages. It breaks down as West, including West and AP Data and ComEd. PJM actually marks other as the Mid-Atlantic and South. And so what we're showing you here is the year-over-year comparison for the spring season, so week 12 through week 25. So you can see that this year generation outages have already peaked in around week 16, which is pretty much around week 14, week 16 and April 14th to the 18th. So we're really looking at a much earlier peak of generation outages compared to last year. And this difference is very much weighted in the western region. You can see the green dashed line denoting 2013 shows significantly more outages occurring, maybe as much as 2 or 3 weeks later in western regions. The next slide here just kind of illustrates that change a little more. So you can see PJM is calling for as much as 10 gigs less generation on outage during the week 19 and 20, that's early May, compared to last year. Now that change is largely driven by less generation outages in West, the green bar line you're seeing there. Overall, this is going to present a healthy supply stack outlook for West and ComEd. It does have potential implications for stronger west to east flows, with quite a few nuclear outages on the schedule going into April and May, which I'm going to show you in this next slide here. So this is planned nuclear outages for the Mid-Atlantic and South. So you can see notable outages are the Surrey 2 unit at the end of April, Limerick 1, which is currently on outage, on an unplanned outage, in the process of starting a planned outage once they resolve the forced outage there. Susquehanna 1 begins an outage on the 12th of April, as well as the Salem 2 at the end of the next week period. So looking back at what I said about a healthier supply stack in West, you're looking at fairly strong flows west to east with this amount of nuclear generation on outage in the east. And then the next slide I'm showing is the planned nuclear outages for Western ComEd. In ComEd, we have some outage. Braidwood 2 starts at the beginning of May. Quad Cities is one that's going out in the next week or so. That could be interesting in terms of some of the flows in from MISO North. There are a number of constraints that we're going to talk about a little later in this presentation that could be supported by additional Quad cities or indeed mitigated by it. The Beaver Valley 2 nuclear unit is also scheduled to go out in Duquesne on April 14. And then we have the continuing long-term work at Davis-Besse that started in February, and that's scheduled to be out until the end of April, and continues to keep a little bit of upside on ATSI LMPs with slightly colder than seasonal temperatures. Now I'm going to hand over to Brian, who's going to talk a little bit about transmission outages.
Great, thanks, Rob. So as I mentioned at the beginning of the presentation, it does seem like when we combed and scraped the list of outages for the next couple of months here, there just aren't as many high voltage outages that are going to be out for an extended period of time over April and May. But kind of the one that really jumps out at you is starting up in another week. It's the Rockport to Sullivan 765 line. Goes out on April 4th, going to be out through the month of May, returns just before June. Now, as you can see on the map here, your Rockport to Sullivan is the X. It's down there on the kind of left-hand side of the map. It's a 765 line. It typically, Rockport is two over a gig coal units that typically send either at least one unit will send up towards Sullivan. The other units and some of the additional generation will flow east along Jefferson, and then Jefferson really pushing in toward the kind of the AEP region toward Hanging Rock, and then the flows kind of work their way southeast into Dominion on the AEP Dawn interface. One area that is definitely sensitive here is the Breed to Wheatland path. Now I know that's a constraint that is posted quite a bit here in the past couple months, but I think we might see that constraint more frequently and with more severity in the coming months. You're most likely to see this type of congestion when MISO wind is strong. It is something that watching our reports, we definitely discuss that every day in terms of what our expectations are for MISO. You can find it typically there's a bullet on it in the AD NIHub congestion write-up. We write something about MISO wind almost every day. So one of the reasons and you might look at this map and say, well, why is Breed to Wheatland really the sensitive part if flows from Rockport to Sullivan are being cut off? I think the main reason for this is because one of the key contingencies on Jefferson to Rockport is Breed to Wheatland. The key contingency for Breed to Wheatland is Jefferson Rockport. So what you'll see is because you're potentially getting an overload on Jefferson Rockport and there's potentially too much stress being put on that line, PJM will go and redispatch across Breed to Wheatland to try to decrease the pressure on that Jefferson Rockport line. The other constraint that you could see there as risk is Bunsenville-Eugene, another common one that we've seen a good amount over the last couple months. In terms of the impacts of these congestions, they would be upside for the AD hub, the AEP zone, and the Dominion zone. It would be downside for your NIHub, your MISO interface, and your ComEd zonal price. The second risk that we have here is going to be up in ATSI. We have seen some ATSI congestion over the winter time frame, not as much as we saw over the summer and maybe even some portions of the fall. But you do have a couple of outages we wanted to note. 345 paths in northern Ohio, the Davis-Besse to Bayshore and the Fostoria to Bayshore are two lines that are going to be going out of service here in the end of April. They both go out April 28th and are out through the middle part of May. So I think the reason that these are pretty important goes back to Rod's initial nuclear generation outage slide. And what we have there is Davis-Besse has been out for a good portion of the winter, actually. That's going to be returning in late May, or late April. I believe it's April 25th. And with that coming out and the Davis-Besse Bayshore line going out, you're going to have additional stress being put on lines like Lakeview Greenfield, Lemoyne to Woodville. These types of constraints are bullish for your ATSI, Penelec, and West Hub. They're bearish on your AD hub and NI hub. So again, and the tough part about the spring and calling for congestion is typically this time of year is the lowest demand period. So I think these lines are going to be sensitive. I think the keys to picking days where you're really going to see this congestion are days when you have under commitment in PJM West, or we're going to really try to spend time looking at PJM West forecast, looking at any sort of deviations between our kind of Ohio forecast and what PJM is saying. I think one thing to watch for is potentially storm and weather risk, where you might see a lot of lighting load through the middle portion of the day. PJM can tend to miss those demand forecasts in the middle portion of the day, and those are periods where you may see additional risk in ATSI.
So I'm going to take over from Brian to talk a little bit about our last major constraint slide, which is down in Dominion. Now, as Brian mentioned, that we are looking at a fairly thin high voltage line outages for the season, as well as mild temperatures driving weak demand. There are a couple of line outages we wanted to highlight in Dominion, notably Dooms Cunningham and Valley Dooms. To talk you through a little bit about the graphic, these green arrows here are illustrating the power flows into and around Dominion. So you can see that there's from Cloverdale and further west, the AEP Dalton space, there's a lot of power stepping off, heading eastwards into the Dominion area. We also tend to be fairly sensitive in that area to the pumping and gen cycles at the Bath County pump storage, particularly in the morning off-peak. Some of the outages that we saw coming out here, Dooms Cunningham and Valley Dooms. Firstly, Dooms Cunningham, the end of April through to the start of May. That gives you some potential risk around, firstly, the Valley transformer, Hollymead Charlottesville, especially with the latter Valley Dooms outage, as more flows are pushed onto the 230 kV network. And also the AP South interface, as you're moving from west to east. Some additional nuclear generation outages I showed you in the previous slide could give you some instances of risk on AP South. That is offset somewhat by the demand. To echo Brian's point, it's really looking at certain opportunities which are most favorable for these constraints to occur. One of them would be when the Surrey 2 nuke goes on outage. That's going to increase the pull eastwards into Dominion. So the end of April right through until the start of June does look like an increasingly risky time for these types of constraints to show up. Equally, we are working against much weaker seasonal demand. And the general flow of power in this area is west to east, so the impact on these constraints would be upside on DOM, BGE and PEPCO to the east, and then downside on AD hub, NI hub, and the AEP region where power is primarily flowing into. I'm also going to just look at some of the additional highlight constraints that we mentioned. So South Canton Samis, again, some upside ATSI risk with that 345 line coming out. Could again put some pressure on the lower voltage 138. ComEd is looking fairly interesting through the month of April. We're seeing Nelson Sterling work, as well as some shorter-term work around Nelson to Electric Junction. The Quad Cities nuke does go out on the 6th of April, so that's going to mitigate the amount of flow you're going to see moving in from the Alliant West and MISO North areas. Crete and John goes out for the month of April. That's one that has historically been sensitive to wind congestion flowing in from MISO North. So you could see maybe some Burnham Munster. State Line Wolf Lake is another one that can show up in that area. Moving over to the other side of PJM at DPL, some work at Cartanza Red Line on the 230s. DPL, as we've seen, is very sensitive to line outages on the 230 network, and that can result in strong upside on the DPL zone and East Hub. Notable constraints we look for would be, say, Cedar Creek, Clayton, Church Townsend.
May 10th, right? Yeah. Yeah. So that line outage is out till May 10th. So we'll add the 5 in there when we send out the slides.
The last one I just wanted to mention with that is the Homer City Water Cure 345. I think that's an interesting one, as that's one of the tie lines with New York. We do have a Homer City 1 unit going out around that time, as well as an extended outage on Keystone. Historically, whenever we've seen congestion occur because of Homer City Water Cure, it's on the Homer City Auto 345 transformer. Our transformer is actually sometimes bullish Panelec West Hub. Then we also see Homer City Charlotte 230 appear as a downside risk. So mixed risk for Panelec overall. I think with Keystone remaining down, Panelec does look a little bit short of power for that period. So you could see some potential upside if you're flowing more directly into Panelec as opposed to out to New York. And then just looking at constraints in May. So firstly, more Panelec, Hampton Lakes, Homer City, some downside risk on Panelec, some potential upside Ad Hub, Ni Hub there. Really tends to show off in the lower voltage lines around Glory, Dixonville East, or Timberlake Trade City. In PSEG, Branchburg Deans on 500 is a notable outage through the end of April through until the start of May. Really around moving power northeastwards towards New York. We've historically seen when we do see 500 kV outages in that area, a lot more power is forced onto the 230 kV network, resulting in bullish PSEG New York interface congestion. Some of the pinch points we've seen in the past have been Bridgewater, Middlesex, and Branchburg, Sunnymead, and these do look like the likely risks for the end of April. And then lastly, we just wanted to touch on the Braidwood nuke outage in ComEd mid-April. That would leave ComEd a little undercommitted, some potential risk on power flows on the 345s, and that's certainly a notable upside ComEd Ni Hub signal with the nuke on outage there through the back half of April there.
Great, thanks, Rob. So just to kind of wrap up what we've touched on here over the last half hour. First the thing that we touched on in terms of demand and our weather expectations. We're expecting more below normal temps to continue here and have a colder than average spring. Now, I think you can look at that two ways. First, you can obviously see how we're experiencing this in March, and that we're getting some really cold days, getting some heating load, and getting some volatility in our prices. I think as you get into May, you really need to completely flip your train of thought and recognize that means you may have less cooling load in late May, and that you may not see as much volatility as we get to the back half of May if it still is colder than average. And talking to our meteorologists, it does look like we're expecting these strong belows to continue through May. Again, this is all relative, so below normal in May tends to be, about, you can have 60-degree temperature and a few degrees below it you're not going to see much of a shift in demand. So I think overall, you just need to be thinking about below temperatures as potentially more heating load in early April, but less cooling load as we get in toward the summer months. Nuclear outages seem to kind of dominate the outages that we've had so far this year, with Calvert Cliffs, Davis-Besse, Susquehanna, Limerick, all being offline for portions of the winter. As Rod illustrated, we have another kind of handful of outages scheduled for the next couple months that I think are probably going to drive any sort of volatility that we have. And lastly, in terms of the outages that we have scheduled, I think the Rockport line is definitely one of the ones to watch. It's out for those 2 months. I think that MISO wind is really the thing to watch for in terms of the congestion risk. And then lastly, because we have these fewer line outages, I think it's really important to be keyed in on the short-term outages that PJM has on the schedule, and obviously any sort of unplanned outages. And we're going to do our best to help everybody navigate that type of stuff. So if anyone wants to discuss more of the presentation in detail, you can feel free to reach out to me. My email, AIM, phone number is on here, as well as Rod's. And then also, as most of you probably get, the instant message blast. That's typically Diana on the other end of that. You can reach her at the GSPJM Daily IM handle. I think we have just a couple of questions, and then we can get everybody off on their day. Yep. Did you see that first one?
Yeah. So we had a question about the impact of MISO wind generation for ComEd and AEP through the spring. So we were looking at, there is some, I mentioned in the presentation, there is some risk on west to east flows in along that kind of Nelson Electric Junction path through from MISO north. However, the Quad Cities being down might serve to mitigate a lot of that bullish NI-hub congestion. One of the patterns that we're already seeing and we're expecting to continue to see with strong wind generation is bullish AD hub, bearish NI-hub congestion at Monticello, East Winnemac. That's one of the paths where we see a lot of MISO central zone wind generation flowing in. And that combined with the long-term outage on Cumberland Bush 138 kV line, that's out until June 30th. We're expecting to see, during instances of strong wind generation, continued pressure on that Monticello East Winnemac line. So overall, kind of from a wind perspective, you're looking at overwhelmingly bullish AD risks through the spring.
Okay. We also had a question on that Homer City water cure outage in terms of its impact on the West Hub. Do you want me to touch on that? Or you sure? Okay. So I mean, that, as Rod kind of mentioned, that tie line is a little bit tricky because a lot of the Penelec nodes that are tied to the West Hub are on the low voltage network. So we've kind of identified mixed risk on that line outage. The first thing to note is if Homer City is running if they're running 2 or less plants, there's definitely less risk on the outage there. But I think if you get congestion on something like the Homer City transformer itself, that would be upside to the West Hub. All right, no, downside? Okay. That would be more of a downside constraint, as would be like a Dixonville to Glory East. That would also be giving you downside. But then some of the more upside constraints would be like anything tied closer to like Seward or Hooversville, or like an Edgewood Shalaka type constraint. Those would be more of your Penelec bullish constraints. So unfortunately, it's not that outage isn't just a clear-cut bullish or bearish West Hub, but it is one that can present some tricky issues in and around Hanalak. I think that is all the questions that we have. So like I said, once we wrap this up, you should get an email from us with the slides and a link to the presentation. Definitely want to thank everybody for hopping on the call this afternoon, and we look forward to talking to you guys some more in the